Welcome back to the deep dive. Today we're digging into a really critical weekly crypto analysis.
This one just dropped yesterday, December 15th, from Vantage Plus.
And the whole report really, it boils down to one big question they're asking. Is sideways price action set to continue?
So our mission here is to figure that out for you. We're going to break down the fundamental pressures, which have, really hit the brakes on momentum.
And pinpoint those exact technical levels you absolutely need to have on your radar for the next few days. It's going to get volatile.
Exactly.
Yeah.
I mean, what we're looking at is a market that just failed to run with some good news.
Yeah.
And this isn't just slow trading.
Yeah.
This is macro fear. It's translating directly onto the charts.
Yeah.
And we need to understand why that enthusiasm just died so quickly.
Okay, so let's start there with the macro picture. The market feels like it's just treading water because there's nothing new, right? No fresh fundamental story.
Right.
We had that little spike with the Fed rate cut last week, but the prices just couldn't hold. Why did all that momentum just bleed out?
Well, what's so fascinating is how closely crypto's weakness is tied to the traditional tech sector right now.
The NASDAQ.
The NASDAQ. The investor fatigue around the whole AI story, which has been, white hot all year, that's pushing the index lower. And crypto is a high beta asset, so when that risk-off mood hits, it's one of the first things to get sold.
That correlation feels tighter than ever. And we're not talking about some abstract weakness. Look at Broadcom. They dropped 10% after strong earnings.
Just because their outlook wasn't stellar enough. It's a perfect example.
It tells you the AI rally is fizzling out, and crypto is feeling that directly.
It absolutely is. And that pressure leads us straight to Bitcoin, which is sitting at $90,399.
And from a technical standpoint, it's a bit of a mixed bag, isn't it?
A very mixed bag.
So on the plus side, BTC is holding above that really strong $85,000 support zone. That tells me people are still buying the dips.
They are, but that's only half the story. The reason we have to be so cautious is that the upside is now capped.
Because it fell back below the 50-moving average on the weekly chart.
That's the key. That move tells us any sustained uptrend is just, it's off the table for now. So while 85K is your defensive line, any more weakness in the NASDAQ
means you should brace for some serious volatility as sellers test that support again.
Exactly.
Okay, so if Bitcoin is struggling, how's Ethereum doing? It's at $3,117.
ETH is pretty much following that same bearish sentiment. For Ethereum, everything hangs on one level.
$2,750.
That's the pivot. If it breaks below that, you can expect more losses.
Yeah.
But, and this is a crucial difference from Bitcoin right now,
Go on.
ETH is still trading above its 50-moving average on the monthly chart.
Ah, so a much longer term, stronger support.
A much stronger anchor. It keeps that long-term uptrend intact, even with all the fear in the market right now.
Now, the setup for XRP, trading at just over $2, it seems much more precarious.
It is. It's the most at risk of the majors we're looking at, I think. It's just prone to profit-taking.
And it's below its 50-moving average on the shorter-term charts.
Which brings up a very serious immediate risk. XRP is forming what technical analysts call a bearish triangle.
And for you listening, that just means sellers are getting more and more impatient. They're willing to sell for lower and lower prices.
And all that pressure is pushing it down towards that huge psychological support zone of $2 flat.
If $2 breaks, things could get ugly fast.
Very fast. We'd really need to see it push back above $2.25 to feel any sort of relief from this downward pressure.
And speaking of tokens that are really susceptible to this kind of risk-off selling, Solana. It's at $133, and you can just see the pain on the chart.
Oh yeah, those recent big red bearish candlesticks have just killed any upside momentum it had.
So what's the key level there?
The immediate line in the sand for SOL is $125. That's the support zone.
And if that breaks?
If the market fatigue pushes it past 125, you could see a quick slide down toward that next big psychological level, which is $100.
So connecting all these dots, what's the big picture theme here?
I think the theme is a fragile crypto market. It's become incredibly sensitive to what's happening in the broader tech sector, specifically that AI fatigue.
Right.
Every single key level we just talked about, 85K for Bitcoin, 125 for Solana, they're all being stress tested by these outside forces.
So a final thought for you to take away from all this. We've established that momentum is stalling entirely because of this AI fatigue spilling over from the NASDAQ. So what happens if, in the new year, the traditional market completely pivots its focus away from tech? What newly unexpected fundamental story would crypto need to find all on its own to get back the momentum it lost here in December?
Something to think about.
Something to think about. We'll see you on the next deep dive.